studying your last two. I swim with tea when they turned in. The staring down to mute and can learn the pole that some kid died.
In this slide, we shift our focus from whether an expense is deductible to how likely that deduction is to attract CRA attention. One of the most practical skills a tax preparer can develop is the ability to assess risk before claiming a deduction. Not all deductions carry the same level of audit risk. Some expenses are closely connected to earning investment income and are generally easier to support. Others have a weaker connection and often require much stronger documentation. Let's begin with the lower risk deductions shown on the left side of the slide. These include investment advisory fees, portfolio management fees, interest on investment loans, and financial publications used for investment purposes. The connection between these expenses and earning investment income is usually clear and direct. Because of that, they are generally easier to justify if the CRA reviews the return. In the center of the slide, we move into the medium risk category. Examples include office expenses and home office expenses. These expenses may be deductible, but the corporation must be able to demonstrate how they relate to investment activities. Simply having an office or a workspace is not enough. There must be a reasonable connection between the expense and the process of earning investment income. Now let's look at the higher risk deductions on the right side. These include vehicle expenses, travel expenses, and management fees paid to family members. These expenses often attract additional scrutiny because the personal benefit element can be significant. For example, if a corporation claims vehicle expenses, the CRA may ask for mileage logs, meeting records, and evidence showing that the travel was related to investment activities. For travel expenses, the CRA may want proof of conferences attended, advisor meetings, due diligence activities, or other investment-related purposes. And when payments are made to family members, the CRA will often ask what work was performed, whether the work was necessary, and whether the compensation was reasonable. The risk scale at the bottom of the slide summarizes an important concept. Lower risk deductions are usually directly connected to earning investment income. Moderate risk deductions can still be valid, but they require stronger support. High risk deductions are often questioned more aggressively and require excellent documentation. The key principle is highlighted at the bottom of the slide. The weaker the connection between an expense and earning investment income, the stronger the documentation required. As tax preparers, we should always evaluate deductions through both a tax lens and an audit lens. A deduction may be technically possible, but if the supporting evidence is weak, the corporation may face challenges during a CRA review. The goal is not simply to maximize deductions. The goal is to claim deductions that are reasonable, supportable, and capable of surviving scrutiny if questions arise in the future. In this final slide, we focus on one of the most important realities of tax practice: documentation. A deduction is only as strong as the evidence supporting it. Many expenses may appear deductible in theory, but if the corporation cannot demonstrate the purpose of the expense and provide supporting records, the deduction may not survive a CRA review. At the center of the slide, you'll see the audit defense process. Every expense should move through a series of questions. First, was the expense actually claimed? Second, can the purpose of the expense be clearly identified? Third, are supporting documents available? Fourth, is the amount reasonable? And finally, can the connection between the expense and the investment activity be proven? When all of these questions can be answered positively, the deduction becomes much more defensible if the CRA reviews the file. Let's look at some practical examples. On the left side of the slide, we have vehicle expenses. Vehicle costs are not automatically deductible simply because a corporation owns investments. The corporation should be able to show where the vehicle traveled, why the trip occurred, whether an investment-related meeting took place, and how the distance was tracked. Mileage logs, calendars, maps, and meeting records can become very important pieces of evidence. In the middle section, we have travel expenses. The CRA will often ask why the travel occurred and how it relates to earning investment income. For example, travel to attend an investment conference, perform due diligence on a potential investment, or meet with advisors may be easier to justify if appropriate documentation exists. Airline tickets, hotel invoices, conference registrations, agendas, and meeting notes all help support the claim. On the right side, we see family management fees. These deductions often attract significant scrutiny. The CRA may ask several questions. What work was performed? Was the work actually necessary? Was the compensation reasonable for the services provided? And most importantly, can the work be proven? Without clear evidence, these deductions can become difficult to defend. The section at the bottom of the slide highlights what I like to call the CRA Audit Survival Kit. Strong files typically contain receipts, invoices, contracts, mileage logs, emails, calendars, and investment reports. Together, these documents create a clear story that explains why an expense was incurred and how it relates to earning investment income. The key lesson from this slide is simple. The best deduction is not necessarily the largest deduction. The best deduction is the one that is reasonable, properly documented, fully supportable, and capable of surviving a CRA review. As tax preparers, our job is not only to identify deductions. Our job is to build files that can defend those deductions months or even years later if questions arise. When documentation is strong, audits become easier, reassessment risk decreases, and the corporation is in a much better position to support its tax reporting. That is why, in practice, documentation is everything.